Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity. But you got to keep in mind that Bitcoin is smart, fast, strong money. If you want to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it. Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity, or a culture, right? So people think it's a risky thing. It's all about people wanting to not take risk. They don't want to guess whether Picasso's or real estate in New York or NVIDIA stock will be higher in 10 years. They want to buy money. They want to buy 1/21 millionth of all the money in the world forever. But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin. And Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
So here we have Michael Saylor sitting down with CNBC yesterday, breaking down the explosive growth of MicroStrategy's stock compared to the S&P 500. Michael points out that MicroStrategy's stock has soared ever since they embraced the Bitcoin strategy back in August 2020. That year was a turning point for the world, ushering in a new way of living. Social distancing, online shopping, and working from home became the norm, while many businesses faced bankruptcy. Yet, companies like Amazon, Zoom, and NVIDIA thrived, capitalizing on the digital shift. This wave of change also impacted the crypto market, with Bitcoin seeing a surge in adoption as people began using digital currencies to store value and transact. This demand pushed Bitcoin to an all-time high in 2021. Michael Saylor's Bitcoin strategy wasn't just a bold move, it was a lifeline to save his company, and it worked. Today, MicroStrategy's stock is outperforming the S&P 500, a testament to Saylor's vision. He's always advocated for corporations to adopt a similar approach, and now the results speak for themselves. Stay tuned until the end of the video for Saylor's latest Bitcoin prediction. As we bring you more clips from the interview, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you, and enjoy the video.
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high-performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made? Right now, I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious, sir, what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing and it's created more demand, but you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1 and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So
Bitcoin has been a game changer for MicroStrategy, dramatically boosting its loan profile the moment they embraced it. By borrowing against their Bitcoin holdings, MicroStrategy provided newfound comfort to shareholders and delivered on promises made. This bold Bitcoin strategy isn't just a financial move. It's a shield designed to protect companies from the relentless devaluation and debasement of traditional currency. Ready for more insights? Let's jump back into the video.
You have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this, though? You know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Arbitrage trading is like finding hidden treasures across markets. It's a strategy where traders buy and sell the same asset in different markets at the same time, pocketing the difference in price. Picture this. You stumble upon a rare collectible toy at a garage sale for $100, but you know it's selling for $200 online. You snag it for $100 and flip it for $200, instantly earning a $100 profit. That's arbitrage in action. In the world of crypto, traders use this tactic to cash in on Bitcoin's volatility, capturing profit as prices fluctuate across exchanges. It's all about timing and market insight.
You know, in the near term, whoever's got the most money can decide whether it correlates or non-correlates. It's like, again, I can lever it up 20 to 1 on Saturday night, and I can trade it long or short.
Hey, Michael, just the whole idea of leverage in something that is admittedly so volatile causes some people some real concern. I mean, I'm far more conservative. I would be worried about that. What's the worst case scenario of something that would happen in a leverage situation like that with the Bitcoin ETF?
I think what happens is people offshore trading on Binance with 20 to 1 leverage get wiped out on Saturday night when there's a potential missile scare. And so they're the degenerate crypto traders. Mm-hmm. On the other hand, what you want is a free, open capital market. Everybody can trade it any way they want. And so if you're going to hold it for more than 4 years, you're going to get superior performance with that volatility.
Institutions are holding their breath, waiting for Bitcoin's massive adoption to kick into high gear as it continues to outperform other assets. This is exactly what Michael Saylor has been hinting at, a surge in adoption that could send Bitcoin's value skyrocketing. Even in the upcoming presidential election, both Republicans and Democrats are now accepting donations in cryptocurrencies, a huge signal of the adoption wave that's on the horizon. This is a game-changing move, and as more players join the space, Bitcoin's price could soar even higher. That's why Saylor's prediction is so bold. Let's dive back into the video to get his prediction.
Before Gensler entered office, the rhetoric was even more controversial. After Gensler entered office, you heard Jerome Powell, Christine Lagarde, Gary Gensler all say Bitcoin is a speculative digital asset. And that was actually a move forward. With the approval of the ETFs, it was a second move forward. I think clearly we're all waiting for big banks, bulge bracket banks, to start to custody and hold Bitcoin. That'll be the third big shoe to drop. There's a tension between the 21st century and the 20th century. In the 20th century, company comes public, it cost $100 million in 4 years to go public. I know, I did it in '98. In the 21st century, I can create a public crypto token in 4 hours for $100. So you have 100 million companies that want to be publicly trading an asset 1 million times cheaper, faster. That's the crypto economy. The traditional economy is you take 4 years, you spend $20 million a year on compliance. And I think that the two sides are talking past each other. But clearly, the future is faster, smarter, stronger.
I mean, you know what Senator Elizabeth Warren thinks about Bitcoin. I mean, if she becomes I've seen her, big jobs.
The political winds have shifted, and I would say that, at this point, the Republicans have shifted to way progressive, and the Democrats are drifting to the middle.
In terms of Bitcoin?
In terms of their view toward crypto and Bitcoin.
And let's say that it is a continuation of the Biden-Harris administration. Does Gensler take on a larger role? It becomes even more difficult?
That's all above my pay grade. What I would say is, my view is...
He would be Treasury Secretary? I mean...
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody. Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%?
My long-term forecast is it's going to go to 13 million over 21 years. It's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25, and at some point it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8%, because it's always going to be a more global, open, free capital market.
And there you have it. Michael Saylor laying out his bold vision for Bitcoin and the future of the financial world. What are your thoughts on Saylor's prediction for a $13 million Bitcoin by 2045? We'd love to hear your take, so share your comments and insights below. And if you enjoyed this video, don't forget to give it a thumbs up, share it to help us reach more viewers, and subscribe for more exciting content like this. Thanks for watching.